Hey, everybody. Thank you so much for coming here today and joining me for the Texas Homebuyer Webinar with Diane Moore. Thank you again for taking the time to come and watch and participate. I really appreciate it. All right, let's get started. So I always like to kind of find out a little bit about you. And one of my very first questions, of course, is, how long have you been working towards buying a home? That means like savings, watching and improving your FICO score, things like that. Has it been, you're just now starting? Has it been less than 6 months? Has it been 6 months to a year and a half? How about a year and a half and longer, right? Let me know about that. How about this next one? Have you ever purchased a home before? And if you have, how long ago has it been since you've been through the process? Has it been, a couple of years? Has it been less than 8 years? Has it been much longer than that? Again, things are always changing in real estate, life, market, everything. So really, no matter what that answer is, I feel like you're in the right place because we're going to really look at the steps, the basics of buying a home today in Texas. All right, so just a quick little note. My name is Diane Moore. I am a real estate broker with Your Home Real Estate. I've been practicing real estate for over 27 years. And as you can see from a couple of letters after my name, I do have quite a number of designations and certifications, which are basically various kinds of special education and experience over all of those 27 years. But again, I really appreciate you being here today. And so I do need to go through just a couple of legal disclaimers, all right? Basically, the information provided in this webinar, it is general information and it should not be intended to be considered any form of legal advice or professional advice. This webinar information is, not intended to solicit you as a client if you're already under contract with another agent. So please don't think that I'm trying to do that. And of course, you attending this and watching this does not create any obligation for you to be my client, and in reverse for me to be your agent. And although the information I provide to you today is deemed to be true and reliable, um, the reality is it cannot be guaranteed. It should be independently verified, and things do change. So it is subject to change. And lastly, I cannot provide you any specific advice to something you might be going through right now, because in theory, you're probably working with another agent and under contract, and if we don't have that kind of a relationship, I can't provide you specific advice. But other than that, guys, this should help you with a better understanding. And of course, if you decide to meet with me separately and later, that'd be great. But today, general information. All right. So, what we're going to cover today is we're going to take a glimpse into the steps of the home buying process. We're going to look at financing and estimating the cash that you're going to need to have in hand and save for. We're also going to take a quick little peek as to how three contracts might actually affect your bottom line. And we're going to even talk about, do you work with an agent or don't you? And again, those will always be your choices, and nobody can force you into working with an agent. It's usually advice that you do, but it's not a requirement, all right? Not here in Texas anyway. The cool thing is, even though there are a lot of steps and a lot of things involved here, I'm not telling you it's going to be easy, but when you buy a home, I am telling you all the little bumps and bruises, all the little headaches, absolutely worth it. All right. So let's get started. So first off, we are going to take a glimpse into the steps of buying a home and what that process looks like. So let's get to it. So step one, do you hire an agent or don't you? Again, your choice, but you do want to make that choice immediately. That literally should be your very first step, hiring an agent or you choose not to, right? Either way, though, you have to think about this. An agent is your guide throughout the entire process. In fact, they kind of act like a general manager or general contractor because they help you coordinate everything involved in the transaction. They not only represent your interests and your concerns, but an agent is there to coordinate all of the pieces and parts of the process. They help coordinate things and communicate with the different companies, with the different deadlines and responsibilities you might have, the different events that are involved, and like I said, deadlines and all those kinds of things. Now, if you choose not to hire an agent, you might find that the process of buying a home is much more confusing than you probably think it is, and definitely more frustrating to navigate all on your own. You have to remember, an agent does this, 10 to 20 times a year at minimum. How many times do you buy a home? So their experience of the process alone should be a reason why you'd want to hire them. All right. But again, it is your choice. So we're going to talk on both sides of this. Step two is now getting pre-approved for your mortgage loan. And the biggest reason for this is you need to find out how much home do you search for, because you need to make sure that what you're looking at is going to be something you will be approved for. The most emotionally devastating thing is when you kind of tempt your tummy of a house that you ultimately find out you can't afford, you can't get approved for. And so, you see this monster of a home with all the bells and whistles, and that you then learn later you're not going to be approved for it. So you want to first get pre-approved, understand your budget, and understand ultimately, because based off of that pre-approval, you'll learn an estimate of what kind of cash you're going to need. Okay. And so as we continue down, you also want to think about when you do decide to buy a home, that pre-approval, you're going to get a letter from the lender that tells people you've been approved up to X amount. And that'll be a very important piece that kind of goes along with your offer. All right. Now, step three is beginning that home search process. Again, remember, do I have an agent or not? Do I hire one or not? Then I need to find out what that budget looks like. Now let's go hunting, right? So whether you're starting your search on Zillow or har.com or any other websites, you now have those parameters of what you need. And of course, if you decided to hire an agent, that agent can help do a lot of those searches for you and on your behalf. And a lot of times, what we can search for as agents can be a lot more detailed than what you might find on the public sites, right? We can kind of dig a little deeper. All right. Now, step four. Now you've been searching online, you've gotten a good sense of what your budget can afford, right? You've looked at all the pictures, you've read a lot. Now it's time to kind of pick your favorites of what you've seen and make appointments with your agent, to go and coordinate with your schedule to go see the homes in person. Now, if you decide not to hire an agent, right? That was your step one decision. I'm not going to hire an agent. Then, of course, you will obviously need to then call each individual seller, and make those appointments separately, right? Again, those are on you, as to that coordination. Again, that if that was your choice, that was your choice. But looking at homes in person, one of the coolest steps, right? Because now you really get to try them on for size. All right, step five. You've now seen a handful of homes or more, and now you walk in and you're like, ooh, this one really fits me nicely. I can really put my lifestyle in this home. I can see me calling this home. I see myself coming home from work and this fitting just right. When that happens, right, now you've decided, okay, this is the home I want to make an offer on. Okay. So that is your step six. It's writing and delivering and likely negotiating that offer. It's the terms, right? It's not just about price, it's timing. And there's a lot of other details that will go into that offer. All right. So step six is all about submitting your wish list and then negotiating into a happy compromise between your wants and needs with the seller's wants and needs, right? That's that compromise so that you can get to that next step, step seven. Your offer has been accepted and you're now under contract. Again, when that happens, there's a lot of sub steps that happen. Okay. So, earnest money and option money, that's what is needing to be delivered immediately upon an agreement with the seller. Okay. So, option money, earnest money, those must be delivered immediately. And then once that is all handled, and or at the same time, you need to immediately schedule an inspection from a third-party inspection company, home inspection, right? And you want to do that because you need to be able to see kind of what's behind the curtain. You want to have an inspector who can go in and test every switch, who can test every socket, who can see what that flow of water looks like. Are we getting enough pressure? All those kinds of things. It helps you understand a little bit better about the health of the home you're buying. No home, I don't care if it's brand new or resale, no home is ever perfect, built by humans. So it'll never be perfect, but you want to make sure that you don't have like major stuff that is a surprise. You want to understand what's going on with the home that you're buying. Because again, for most of us normal humans, this is the most expensive thing that you're ever going to buy, right? So you want to have a good sense of what's happening. Now, if you learn from the inspections that there's something where you go, ooh, I don't know, this is a pretty big thing here. I'm not sure I want to continue forward and buy this home. You might be able to negotiate what that big item is, big to you or big period, right? You're going to want to see, is the seller going to be willing to bend and flex a little bit on that big point to you? So whether it's a financial thing, if you have them fix something, whatever it is, that is something that you're going to want to do and tackle pretty quickly after your inspections. There's a timing for it, and it's called the option period. And so during that time frame, which is a very short window, usually a week, week and a half, you try to renegotiate a particular term or some compromise, which can be a combination of a repair or a dollar. Okay. So again, that's a very important sub step. One of the next exciting steps is your last and final step, which is step eight, getting ready for the closing table, right? During these remaining weeks, you need to have serious, important focuses on things like timely follow the requirements and instructions from your lender. It is really important that you do so. Okay. And then the next very important thing throughout the remainder of the contract timing is save, save, save. You must save every penny. You want to make sure that you being short a few dollars, meaning a couple hundred or a couple of thousand, is your make or break for buying that home and honestly kind of getting contractually in trouble, right? You made a promise to buy a home and you don't want to, put that in jeopardy because you spent a bunch of money or you threw a bunch of stuff on credit or things like that. So you've got to be very careful about saving your money and making sure that you have the right amount by the time you get to the closing table. You need to make sure and protect your credit scores. Excuse me. right? Protect those credit scores. And really, you do that by not letting anybody but your lender run your credit. Don't go shopping for furniture. Don't go buy a car. Don't do anything that might put your credit score and history in jeopardy. Okay. You need to, finally, within a week or two of closing, you're going to want to schedule all of your utility hookups. So whether it's a transfer or a fresh setup, you need utilities, you need electricity, you need gas, you need water, trash pickup, internet. You want all of those things to be scheduled and set up. So we've looked at your basic steps, but now what is the time frame for those steps? All right. So just your basic pre-qualification, which is basically they take your word for how much you make and what your credit score might be. That could be within a day. But to get a real pre-approval, something you can really sink your teeth into, that's going to take 1 to 2 weeks because you're going to need to provide paperwork like, bank statements and your paycheck stubs and possibly a couple of tax returns, things like that. So real pre-approval is 1 to 2 weeks. Then next, you're looking at finding the right home. For some people, that could be within a week or two. Depends on scheduling, depends on your personality, but it might take you a couple of months to find the perfect home for you, right? So the timing is your biggest flux is finding the right home. All right. Next is once you are in fact under contract with the seller, now on average, you're looking at a month, right? Maybe 30 days, give or take a few days, right? That's your typical time frame for that kind of thing. So on average, from the very beginning to the very end, it can be 2 to 3 months on average. Some people, boom, 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 it's going to happen within a month. Other people, 4 or 5 months. Most people, within 2 to 3 months, you are in fact in your new home. So, chat box questions, um, because for this video, we were having some technical difficulties. I was not able to have the live version work out as well as I would have liked. So please feel free to send messages in comments that I can try to answer online for you. So feel free to make some comments with questions with this video, and I'll do my best to tackle this for you. So our next step is about financing and estimating the money needed. All right. So what we're going to dive into are a handful of things. We're going to look at loan qualifications, a dollar breakdown. We're going to look at popular loan types. We're even going to touch on down payment assistance. And then we're also going to touch on how important the communication is with communicating with your lender. All right. So let's take a look. So, when you're ready to get pre-approved for your loan to buy a home, the lender is looking at a few things along with documentation. They're going to be looking at your FICO credit scores, right? Your FICO credit scores need typically to be no less than 580, or for even more options, a 620. They're going to be looking for what is called debt to income ratio, and that ratio to be safely, at or below 40%. Now, there are some loan types that might, be a percentile or a few above that, but generally 40% or below is kind of your sweeter spot, okay? So in order for you to calculate this, right, if you're going to calculate yourself, what you do is you divide the total of your monthly minimum payments. Like a credit card will say your minimum monthly due, that's the number. So add up all of those and you determine what that total monthly minimum payments. You're going to divide that by your gross monthly income. Okay, so again, your gross monthly, that's before they take out taxes and all the other stuff they take out. So gross monthly income. So that is your debt to income ratio. Next, they will be looking for you to have consistent work history, right? So if you're a W-2 type of employee, they might want to see 2 to 4 paycheck stubs. If you are instead like a 1099 contract employee, right, like self-employed or things like that, they're more likely going to want to look at least or about 3 years worth of income tax returns. And they're going to be looking for some consistency with the same company or at least the same industry. And then, of course, next, they'll be looking for you to have 1 to 2 forms of current government issued unexpired IDs. And lastly, they're going to be looking for you to have enough liquid cash, right? Literally what you can pull out today, not something based off of the market or other things that might take a few weeks for you to pull out. So if you plan on using some of those kinds of things and you're starting to look for a home, now's the time to pull it out if you haven't already, because they want to see plenty of cash in the bank so that they know you've got the funds to close. All right. So think about those kinds of things. Our next focus is like, well, then how much do you need for a down payment? I'm certain if you have searched online, you see a lot of different things like 20%. Maybe you've seen 10% or 5%. But the reality is, it depends on your loan type. It depends on your credit history. Yeah, it does. It depends on all sorts of things like that. So don't make assumptions it's 20% and that's what's been taking you so long. There are plenty of loans out there where it's less. All right. So we're going to break those down for you. One of the things you want to look at, of course, are your closing costs. What I would consider a non-closing cost, but it's cash out of pocket, is going to be that down payment. Right? Like I said, it's depending on your loan type, your credit history, and actually the purpose of your purchase. Are you buying an investment home or one that you will live in? It actually makes a difference in how much down you're going to be required to have. Then the next is your earnest money and your option fee money. So your earnest money is, those are funds that demonstrate not only how serious you are about your promise to buy the home, but it's also, think of it like a security deposit when you rent, right? If you don't follow through with your promises, you might lose it. Okay. Option fee money, right? This is placed down up front. It allows you to buy the right to terminate. It's for a limited amount of time, but it allows you, like, how we talked about getting those third-party inspections done. This is that right that you would buy in order to, make that final determination. Do I, in fact, want to move forward? Have I negotiated if I needed to with the seller? Am I ready to continue pushing forward? Again, you're buying a right, but it is for a very limited amount of time. Okay. So other things, other non-closing costs are things like that third-party home inspection that we talked about. In that third-party home inspection, it might be anywhere from $600 to $1,500. There's a lot of things that determine the amount. Um, let's see, things like, does the home have a swimming pool? How large is the home? And every inspector, just generally for those things, will have different rates. And that's okay. That's just what it is. But that way you're prepared. And then we look at closing costs, right? Your more official type scenarios. So one of your closing costs might be fees charged by your agent representative, the one you hired. They are going to be with you, of course, for the duration of your home search process. So anywhere from 2 to 6 months worth of time. It's easily compared to services you would pay for hiring other specialists, such as an attorney or a doctor. Like if you were a professional sports player, you hire agents. I mean, agents are there for a number of reasons, and you benefit from their know-how, their experience, and obviously how long they've been doing it. Obviously, an agent or a broker, they charge fees based off of their experience levels, additional educations and specialties. Sometimes this fee is negotiated with the seller to get help in paying for the fee that you would owe your agent. In fact, often that's the case. Other closing costs can be like lender fees, right? And what that is, again, it's another professional service and specialty. They're going to vary lender to lender. Some other fees could even be based off of your credit history. So there's a lot of different reasons for the different fees and different lenders and what they may charge. Um, Another closing cost can be appraisal fees, right? Those appraisal fees can probably range from 6 to 900. It's depending on the size of land. It could be the size of the home. There are a lot of variables that go into that. But appraisal fees, like I said, can be 600 to 1,000. Again, with a lot of variables in between. Another closing cost, title company fees, right? Title company fees tend to range between 750 and 1,500. There are a lot of odds and ends and a variety of fees. And those will be in addition to what's called a title policy, and you'll see that in the contract itself. And so a title policy on average is roughly 1% of the sales price. But again, a lot of times that's negotiated with the seller, and oftentimes you might be negotiating to have the seller pay for that. Again, these are all negotiable items. Another item that will be a closing cost is going to be your homeowner's insurance. So just like you have insurance for your car, you have insurance for your home. And so not obviously, but you often will pay homeowners insurance a year at a time. When you pay for it with your car, it's either 6 months or it's a year. For homes, it's almost always a full year up front. Okay, so that's an excuse me, that is another closing cost. All right. Other closing costs will be your property taxes. It'll be a prorated version of this. And frankly, the nice thing is it's in your favor. So it is prorated for the amount of time you will own the home. So obviously, you don't own it from January 1st to the day of closing, but the day of closing to the end of the year, you will. So that's the amount that will be out of your pocket one way or another. And most of the time, it's on paper, not in reality. And in fact, you're going to be getting a prorated credit from the seller for the amount of time they owned the home for those property taxes. Um, Another closing cost is the lender escrow account. And so this one is interesting because basically what's happening is a lender is going to be building up a pot of like 2 to 3 months worth of things like your taxes and your insurance. And because both of those things are paid a full year upfront or in arrears like taxes, but either way, it's all paid in one bulk. So they're going to collect it from you monthly, but at closing, they have to first build a little bit of a pot, like a safety net, and that's called an escrow account. All right. Now, when we look at the timing and kind of that breakdown, you need to look at what's due early in the process and late in the process. So as you can see on your screen here, you have money that's needed before closing, earnest money, option fee money, third-party inspection fees, sometimes your appraisal. Those can be all due upfront. And then at the time of closing, this is usually a much larger amount. This is your down payment, lender fees, title company fees, buyer representation fees, and most of the time, those appraisal fees, right? Appraisal fees, it's either before or after. Most of the time, it's after. So, for your planning purposes, I have always found that it's better to be safe than sorry and save too much. And so, I would encourage my buyers to be saving anywhere from 8 to 12% of the sales price. And generally speaking, that has been plenty. That has been enough, and often more than enough that they will need. So 8 to 12% is like a good barometer on what you want to be looking at for savings for buying a home. All right. Now, obviously, like I said, most of this is going to be later and kind of after the fact, but I just gave you a bunch of information. So if you have any questions, please type them in the comments section, and I promise I will do my very best to address and answer questions, okay? All right, let's continue. We look at different mortgage types. All right, so the most common mortgage loan types are going to be conventional loans, FHA loans, and for our veterans, VA loans are very possible. All right, so first things first, let's look at conventional loans. These are typically considered the most attractive, not only to you, but even to the seller, right? They just tend to be very attractive. The down payment, again, there's lots of variables here. It could be as low as 3%, but the more common is 5%. But conventional loans can start that low with down payment, 3 to 5%. Very cool, very manageable. And then we have FHA loans, right? A little bit more restrictive, but sometimes a little bit more flexible when it comes to your credit scores and credit history, even sometimes the debt to income ratio. Conventional loans might be a little tougher, a little stricter. You're looking at probably a 620 minimum credit score. FHA typically can go as low as 580. But again, you get more perks, more options, the higher your scores are. But with an FHA loan, 3.5% can be your minimum down payment. Very sweet. A VA loan, it is restricted to military veterans um, who have been discharged honorably, who have their certificates of eligibility, and or their spouses of veterans who have passed away. VA loans can all be available in that context. And super cool is they have loans for zero down, not 3.5, not three, not five, not 20, but zero down. Now it's unrelated to closing costs, but down payments typically half of what you need to bring to closing. Super cool and well deserved. So those are the three major loan types. There are many more, but those are your three main ones. Your monthly payment, what does that even look like? What is it broken down into? You have your principal, right? This is the portion that if you have, here's the amount of the loan, you divide it by 30 plus interest, but that's your principal, right? It's strictly about the loan amount. Okay. Then you've got interest. Interest is the fee charged monthly for your ability to buy, to get that loan. You have to pay a piece of it through interest every time. Think car payments or anything else. Interest, it's a booger, but it's there. And when you look at the massive amount that most of us are borrowing, your interest is equally big. Okay. Now, over time, it shrinks as your equity in the home grows, right? But it takes a while for that to start happening. Now, remember how earlier we talked about prorated taxes, and we also talked about how your lender collects a little bit every month because they have to pay the full bill once a year. So you're going to see a prorated amount of your estimated taxes, and you're going to see that in your monthly payment. Then besides all of that, you're looking at that 1/12 of your homeowner's insurance. Again, they're paying that bill in one lump sum every year. So they're going to collect 1/12 of that out of your monthly payment. So principal, interest, taxes, insurance. But wait, there's more. You're going to have private mortgage insurance. That's tacked on into your monthly payment. Basically, what PMI is, it's a separate fee charged by your lender as partial protection in case you miss any payments. Okay. So for an FHA loan, it is there for the life of the loan. For a conventional loan, once you have paid down 20%, or in reverse, you have 20% equity in the home and the loan that you owe is less than 80% of the value of your home, then it will automatically be removed from your monthly payment. And on average, you're probably looking at $200 a month. So it can be pretty significant. All right. Now, conventional loan, like I mentioned, you're looking at that picture, FHA loan. Sorry, I've got a little frog in my throat. An FHA loan, like I said, it will be there for the life of the loan. You're not able to get rid of it. All right. Switching gears a little bit, we've talked about that down payment, right? And we've looked at 3.5%, 5% as a bare minimum, right? Could be more, but those are your most common minimums. So when we look at that amount, that's still quite a few $1,000s out of your pocket. Well, what if you could get that down payment assistance or get that down payment covered with some assistance? I mean, wouldn't that be very, very cool? You have to qualify for it, but many of us would qualify. Okay. And it's added perks. It's these programs can be supported by the city or the county. Many of these programs are state funded. Now, again, they're not available to everyone, but they are available to many. All right. Two very common down payment assistance types are grants and our second forgivable liens. So a grant is basically free money. You don't have to pay it back ever. It's just given to you. Then the more common is called a second forgivable lien. Basically, it's kind of treated like a grant as long as you hold on to that loan and pay it faithfully for 3 to 5 years, right? Each loan type, each down payment assistance type, they have their own restrictions, so you'll always have to find out the details. But as a broad discussion, you're looking at 3 to 5 years. And as long as you still have the same loan, the same house, the same everything, then after the 3 to 5 years of you paying faithfully and on time, etc., then all of a sudden that sleeping loan of assistance disappears and converts to a grant. So that's what it means by forgivable. They forgive that loan of a down payment. Okay. So a little complicated. That's why I like to have it also on the screen. But again, your two most common DPAs are grants and second forgivable liens. And as long as you're in the house for 3 to 5 years as a minimum, you should have no problem with the second forgivable lien. Again, there are other DPA types, down payment assistance types, but those are your most common. Now, some of the programs that you might consider are the Texas State Affordable Housing Corporation. This is provided through the state of Texas, obviously, and it has multiple programs available. Income ranges from 70 to $160,000, and that's combined income, or if you wanted to buy it on your own, your income. So you have to keep all of that in mind. And then anybody who's on this loan, you have to have, your median score, if not your minimum of a 620. All right. Then we've got the TDHCA, Texas Department of Housing and Community Affairs. Income ranges for this type of DPA is anywhere from 89,000 to 102,000, with again minimum credit scores of 620. You now got also the SETH programs. That's SETH is Southeast Texas Housing Finance Corporation. They have multiple programs. Each of these have multiple programs. Income ranges could be as low as 45,000 to as high as 170,000. Minimum credit scores 640. Okay, this is why credit scores are so important when you're buying a home or anything else. Okay. Then you have the NACA program, Neighborhood Assistance Corporation of America. They have multiple programs, okay? We have very locally here in the Houston area, or I'm sorry, just generally, I don't know, I said Houston, sorry, but Home Buyer Assistance Program. It's only available in the, okay, that's why, available in the city limits of Houston. Income must be within 80% of City of Houston's average median income. These are Googleable, right? So you would Google what the city of Houston's average median, not, anything else, median income is. And if your income is within 80% of that amount, then you would likely qualify for this HAP assistance program. All right. So down payment assistance, definitely worth your while of investigating and or mentioning to the lender that you work with. Speaking of which, now that you're aware of some of the main loan types and some of the more common down payment assistance programs, you can have a very good, intelligent conversation with the lenders. And you might even consider interviewing one, two, three lenders, and getting a sense of how well they communicate with you, how comfortable you are with them, because you're going to be working side by side with them during this process, right? And of course, once you've been pre-approved for your mortgage, you want to make sure that you obtain that pre-approval letter from them. But communication with your lender, super, super important. So again, we've talked a lot about the dollars, the financing, assistance programs. So please feel free, take a moment, push pause, and ask a question. I will get to it as quickly as I can, and let's continue. So, how might three contracts involved in buying a home affect your bottom line, or will they? This is the question. So, one of your first contracts involved in buying a home is when you hire working with an agent, right? So, that contract between you and your agent to purchase a home, it will have in that contract the various terms, the fees charged. Um, most of the buyer representation contracts that I have seen, they will even have promises of working on your best interest to try to get some or all of this paid for by others, such as the seller. Again, you can't guarantee it, but promising best efforts to make that happen, it will certainly at least reduce the amount that you might owe from those promises. Then your next contract that would be involved in touching your bottom line or how it might affect your bottom line is actually the contract between the seller and their agent. Because in their contract, it'll discuss and touch on different terms, different dollars. It'll discuss the seller's willingness to maybe help you out with some of your costs, um, which would include your representation fees, right? So that's also a contract that's involved directly and indirectly, but touches the possibility of your bottom line when you buy a home. And then obviously that final contract of three is the agreement between you and the seller. And again, this discusses all the various terms directly between you and the seller. But within this contract, it will also have language in there requesting the seller's help in getting you reimbursed for some of your obligations of paying an agent, right? And what you've promised to pay them. And so you'll get some or all of that covered. And so these three contracts are all involved in touching your bottom line of what you might have to bring to the closing table, right? They're all involved, they all affect you, and they're all related, and they all domino upon themselves. And so that's why having help and assistance and guidance on getting these things tackled are in your best interest. So, an example, kind of in concept, could be when you visit the doctor, it costs money, no matter what. You must sign paperwork agreeing to be responsible to pay them the full amount billed, whether you have insurance or not. And if you have insurance, your health insurance, policy will ultimately pay a portion. You're usually going to have a copay. And what if what you thought might be covered and the doctor thought would be covered, part of it isn't covered, right? Then you're now obligated to pay the rest. That's the same concept of how the three contracts ultimately affect you. You promise to pay your agent X amount. The same thing happens between the seller and their agent. And then at the closing table, because of what's been agreed to between you and the seller, then some or all of that might get covered. And maybe what you have to pay your agent is only a portion of it, right? Think of it, and like I said, was that as that copay. Every once in a while, it ends up not being covered by the seller, and you have to pay the whole thing, but it'll be coming out typically at closing. And that's kind of how working with an agent and any dollars that might affect your bottom line, how they all three kind of interrelate and affect or maybe not you. So kind of an interesting concept on how that all plays together. So again, feel free to hit pause and ask a question or two, and I'll do my best to come in and address those for you. Lastly, do you work with an agent or not? This is the question. Okay. So remember that that was step one, but now we're just going to dive briefly into a few more details. So if you choose not to be represented, then you remain as what is defined as a customer, and you will need to then familiarize yourself with the laws involved, the contracts involved in buying a home, any attachments or addenda or notices that are going to be required. You're going to have to understand the various deadlines and responsibilities that will fulfill your promise to buy that home. You're going to have to, work with the agent who works for the seller. And again, my words are specific. They work for the seller, not you. So every time you call off a sign to go see a home, every time you call off of an ad to find out more information, anytime you make an appointment to go see that home with that seller's agent, they are the seller's agent, not yours. They can't provide you with opinions and advice. They are not allowed to help you in that way. They can't give you an idea of what the seller might accept. And anything and everything you tell that seller's agent, their responsibility is to now share that with the seller. And obviously, that's, information that might harm your ability to negotiate a decent deal, something you'd be happy with. Okay. So those are those kinds of things that could happen if you don't hire an agent to represent you and your interests. But in fact, if you do decide to hire an agent, and statistically most people do, then you're going to benefit from their experience. You're going to benefit from their skills, their thoughts, their opinions, their advice, their real estate specific education. You're going to have somebody that can help coordinate this process and make it a lot easier, a lot smoother than it would be, and a lot less confusing than if you were out there on your own. Okay. So when you consider, how many times your agent has helped people buy and sell homes compared to statistically how many times normal consumers are going to be buying and selling a homes, this difference and this experience level is quite significant. So think about this. An agent can suggest, quality lenders. They can suggest, things to consider, questions to ask those lenders. They can help you assist in analyzing loan estimates, right? They could help you provide access to all, properties with that one email or text message or phone call with your agent versus feeling like you in reverse have to nickel and dime because you're going to have to call individually, each property each time you want to go do anything. An agent can help prepare analysis on pricing, making sure you don't overpay for anything. They can help you negotiate because this is truly what they do. They can help you review and discuss, these terms and make adjustments on the fly. They can help you prepare for a successful closing. There are many questions you might consider asking an agent that you might want to hire. Questions could easily be like, do they have experience with the type of home you want to buy? Meaning, are you buying a single family home? Are you thinking about buying a condo or a townhome or a duplex, right? What are you buying? And does that agent have any experience with that? How about asking them how long they've been selling homes actively, right? Sometimes if you ask how long have they held a license, may not be as good as how long have they been actively selling homes. It's a slight difference. All right. How about are they in real estate full time or do they have other jobs like driving Uber or DoorDash or do they have any supplementals like that? How about have they sold homes in the areas that you're hoping to buy in? Now, again, if you're buying a home in Greater Houston and they buy, help people buy homes in Greater Houston, you're probably already in good shape. But what if you want to buy a home in Clear Lake, or what if you want to buy a home like a farm and ranch? What kind of experience do they have with that? Ask those kinds of questions. Do they hold any specialties, any designations, any certifications for anything of interest, like negotiation specialties or buyer representation specialties, things like that? How about how do they want to communicate with you and how do you want them to communicate back? How long would you and they be committed to each other, right? If you form a contract with that agent, discuss how long would that commitment be? 3 months, 6 months, a year, right? It has to be, yeah, makes sense for both of you, right? It's always life is always a compromise, but ask those kinds of questions. How about do they have any references or any ratings? A lot of us like to look at ratings, right? That's the easiest. But ask if they have any. Okay. So these are some good questions you might consider asking your agent or ones you're interviewing. Again, feel free to hit pause, ask a question or two in the chat box. I will get back to you. Okay. So we've looked at many of the steps of the home buying process. We've looked at, financing types and estimating cash and things like that. We've even touched a little bit on the three contracts that might affect your bottom line and considering whether, to work with or without an agent. Okay. So do you have any questions? Is there anything that I could try to help answer? Look, this is my information. Again, as a reminder, Diane Moore, I'm the broker with Your Home Real Estate. I would love for you to feel free to reach out if you want a PDF of some of this information. If you're not currently working with an agent and you'd like to consider interviewing me for that job, I'd be happy to talk with you further. This is my email, yourhomereservices@gmail.com. If you want to learn a little bit more about me, my ratings, or anything like that, my website is yourhomerealestate.com. Guys, thank you so much for watching this video, asking me questions that I can answer later. And if you have any desire to possibly hire me, that would be wonderful. Love to talk about that further with you. Again, you are home, reservices at Gmail or yourhomerealestate.com. Thank you guys so much. Really appreciate your time. Thank you so much for watching this video, and hopefully I'll get to talk with you soon. All right, guys, thank you so much. Bye.